research at ANZ to join us this morning to decode what the global market setup is looking like and how exactly are Asian markets expected to react to the tariff deals as the deadline for August 1st looms. Hi, Mr. Goh. Thank you so much for joining us this morning. A very good morning to you. Now, let's start by, of course, talking about tariffs there. Now that August 1st deadline is looming, what are your expectations when it comes to deal with, Asian countries like China and India about signing off that US tariff trade deal?
Yeah, good morning. The first August deadline is looming large this Friday. My expectation is that if countries are yet to secure deals by then, I think it's very likely we might get a further extension to buy more time for deals to be sewn up. So far, the US has really only announced deals with 6 countries, and there's plenty more that continue to negotiate. And in the case of India, there was initially hope that India might be one of the first to secure trade deals, but to date, we're not quite sure how close to the finish line both parties are. I think there's a good likelihood that some kind of extension can be granted in order to finalize the trade deal with India. In the case of China, another major important trading partner for the US, they are on a different timeline. So US and Chinese officials are in Stockholm this week for talks. The word is that there will be a 90-day extension to their 12th August deadline, buying a lot more time for both countries to hash out a more comprehensive trade deal. So overall, the way markets are responding is expectations that there's not going to be a sudden escalation in tariff tensions this Friday, that the US will allow more time for more deals to be done.
Right. Mr. Goh, hi. Good morning. This is Ankita also joining in. Mr. Goh, the deal that Japan has struck with the US of a 15% tariff, is that going to have implications or a certain pressure on other emerging markets to have similar kind of deals?
Well, it will provide a sort of a template or a benchmark in terms of what kind of deals other countries can get. If you look at the announcements so far, it looks like we're going to settle within a 15 to 20% range for deals. Now, this is, if you look at Japan, for example, or even the EU, both of them have been levied with 15% tariffs, despite both being very strong important allies of the United States. Despite that, they couldn't get below 15%. So that tells you that there's quite difficult to get below that 15% mark, particularly if you haven't been hit with the minimum 10% baseline tariff already. For the rest of Asia, if you look at Vietnam, Philippines, and Indonesia, they've been hit with 19 to 20% tariff levels. So again, that tells you that for other Asian economies, it's very likely that 20% could be the ceiling. Of course, they'll all try to negotiate it down towards that 15% mark. I think that's something that India will be hoping they'll be able to settle at. But we are getting a lot more clarity around what kind of range that President Trump will be willing to settle on.
That's right. So like you said, 20% could be the ceiling for Asian economies that are yet to get trade deals. But, Mr. Goh, given the performance of Asia-Pacific markets, it's largely been mixed. What is your expectation when it comes to key indices in the near term leading up to that tariff deadline on August 1st? One is that. And the second thing, of course, with these tariff deals, US is looking to strengthen its economic position. So once that happens, and if that happens, what's the likelihood of capital outflows from Asian economies?
I think we have to look at it in 2 parts. Firstly, there's the announcement effect. As we've seen clearly in the case of Vietnam and Indonesia, when the deals were announced, we saw their local equity markets responding very, very positively. In fact, the Vietnam equity market just hit an all-time high yesterday. And it's really the removal of uncertainty more than anything else. Yes, a 20% tariff level is still very high compared to what it was before, but it's really removing that huge element of uncertainty, businesses knowing what they're facing and being able to adjust. So the initial announcement effect is that. I think further down the track, though, this is where how it really starts to impact on economic activity, how much it starts to slow growth. That's where we'll see the next stage in terms of investors, trying to anticipate and factor that into asset markets. I think we're not quite there at this stage yet, partly because we're still in an environment where markets are more breathing a sigh of relief that the worst of the tariff escalation is not proving to be a reality. We're settling towards a tariff regime that probably is more acceptable. So that's something that markets are responding more positively to. And on top of that, I think there's also expectations that the U.S. Federal Reserve will also be looking to signal that they are getting ready to cut rates in September. So I think that's something else that is helping to shore up markets for the time being.
Right. Thank you so much, Mr. Goh, for joining us and weighing in on the outlook for the markets and the tariff deal going ahead. On that note, let's move on and take a look at all the stocks that are going to be in focus in today's trading session. For that, we're joined by Varun Sharad.